I'm an accountant that's worked with makers and Etsy sellers since 2011, and I've seen it all at this point. So today I want to share the worst 3 financial mistakes I see shop owners making so that you can avoid them. Hey there, I'm Janet LeBlanc from Paper and Spark, and I help makers and artists just like you start and scale online businesses so that you can achieve your entrepreneurial dreams with ease. By the end of this quick video, you'll know what mistakes to avoid yourself, and you'll know how to fix these boo-boos if you've already made them. Make sure you stick around to the end where I will share a bonus tip which many sellers have told me is the most painful regret they have 2 or 3 years into running their shop. So I started selling jewelry on Etsy back in 2011, and I've been part of the maker community ever since. But I came into this space with a unique background as a CPA and a numbers person. So I started helping other makers with their business finances through my business Paper and Spark in 2014. So over the past almost decade, I've helped thousands of artists get their financial ducks in a row, and I want to make it clear there is no shame in not understanding these topics when you get started. We just don't know what we don't know. Most people don't come into it with a degree in accounting, and there's not a ton of clear, in plain English, applicable information out there on these topics for physical product sellers, makers, and online shop owners. So with that being said, the mistakes that I'm outlining for you here today, I want to make it clear. I'm telling you this without judgment. It's a safe space. If you have questions, if you feel confused, you are always welcome to reach out to me in the comments or email me at hello@paperandspark.com. I am here to help. Let's dive in. The first big financial mistake I see Etsy sellers make is trying to compete on price. If you are not careful, Etsy can very quickly and easily become a race to the bottom when it comes to pricing. There are a ton of other shop owners on there who are undervaluing their time and their talent and thus underpricing their products. I really want to urge you to resist the temptation to look at what prices your competitors are selling their products at, because you don't know their business back end. You don't know their costs. You don't know what their margins are. You have no idea if they're able to pay themselves what they need to pay themselves, if anything. Basically, you have no idea if they're running their business into the ground or not. They may be out of business by next year. Other people's prices are really none of our business. Competing on price is simply a losing game for you. If you're watching this, I'm really hoping that your goal is to build a sustainable, long-term, profitable business for yourself or your family. And to do that, you must set prices that are profitable. There's no other way that you're making money, bringing money into your shop. It's all dependent on your prices, right? That's the money that you make, is what people pay you for your goods, the prices you set. So you must set prices that actually allow yourself to not just cover your costs, but also give you the extra cushion to pay yourself for your time and talent. Otherwise, you're just going to break even, or even worse, end up in the negative. Setting profitable price points means you have to know your numbers. You can't price to cover your costs plus profit unless you actually know your costs and your ideal margins to begin with. Which leads me to the next big financial mistake I see, number 2, not keeping track of your shop's books. I get it. Bookkeeping is not super fun for most of us. It's not very intuitive. Out of all the things that we can do with running an online business, bookkeeping usually doesn't rank in like the top 20 most exciting activities, right? It also doesn't always seem super useful, especially when you're in the startup phase. Maybe you're thinking like, I don't have a whole lot to track right now, or I can get started on that later. So I sell bookkeeping templates made especially for makers, and I'm very familiar with this mistake. Every year, summer is slow, fall is slow, even Q4 for the most part is very slow for me because my audience, y'all makers, are busy making things and filling those holiday orders. Then it's like magically on December 28th, the holidays are over, year end is almost here, and bam, my website explodes, my inbox explodes, everything explodes. The questions, the DMs, the convos are nonstop December 28th until like April 8th. Y'all are catching up on your books. You're trying to remember a year's worth of stuff that happened 12 months after the fact, 13, 14, 15 months after the fact. You're trying to do a year's worth of bookkeeping in a 2-week period before you have to turn over stuff to your tax preparer or do your taxes. So I'm very familiar with this mistake. Do yourself a favor. Get a bookkeeping system to support you now, not once you're scrambling to meet the year-end deadline. Keep it up to date on a monthly basis. Make sure that you actually understand how to use that system so that you will actually use it and not avoid it like the plague. And of course, if you're curious about my Paper and Spark spreadsheet system designed especially for this purpose in mind and especially for makers, check out the video, The No-Brainer Bookkeeping System for E-commerce Sellers here. Have you been guilty of either of these mistakes so far? Like the video and let me know in the comments. Not keeping up with your books doesn't just have consequences at tax time. It means you're missing out on a wealth of information your numbers could be teaching you throughout the whole year. It means instead of running your business proactively, you're likely running things reactively. It also means that you're less likely to understand your margins and pay yourself what you need from your work, which is why mistake number 1, not pricing correctly, happens so often. You're not keeping track of your numbers in your books. You don't even realize that you're running at a loss or not making as much as you think you were because you're not keeping track of stuff in your books. The third big mistake I see Etsy sellers making is not understanding their tax responsibilities or thinking that they just don't have any tax responsibilities yet. So unfortunately, as you probably know, setting up shop online doesn't come with a handy Tax 101 manual that like you get in the mail when you set up your Etsy account or your online account. Again, no shame here. We don't know what we don't know. And when you go out there to try and search for answers to these questions, there's a lot of misinformation out there or things that you're not even sure if they apply to you, anything related to taxes. In my work, I've seen lots of Etsy sellers that are just plain not sure what tax rules and requirements apply to them and at what point in time. A lot of times we hear things like Etsy takes care of taxes for us, and we don't realize like that applies to some stuff like sales taxes, but not all the stuff, not all the things that we need to take care of and know that we're responsible for. So a lot of sellers just set up shop online and think that they're just going to experiment for a while before becoming a real business. Lots of air quotes. I see a lot of sellers try to kind of skate under the radar while they figure things out, not knowing that they're required to do some stuff from the beginning. And they'll do that for months or maybe even years before they realize that they've done something wrong and they get hit with the overwhelming task of trying to backtrack. Or worse, they could end up owing fines, penalties, or interest for not doing it properly in the beginning when they started selling. So I want you to know that the truth here in the US is that you have to report your sales from your online shop from the beginning for income tax purposes. We have to claim those sales somewhere for income tax purposes. It either goes as other income on your personal tax return, or if you're filing as a business, it usually will go on the Schedule C if you're a sole proprietorship with your personal tax return. And I do have more information on that in my video, the step-by-step guide to filing your taxes for e-commerce business owners. I really encourage you to take a look at whatever tax forms you need to be filing for income tax time now before April 15th gets here, so that you can understand what will be expected of you. The more you know now, the fewer surprises that will be waiting for you down the line at tax time. Reach out to a tax professional if you want to. Someone who specializes in e-commerce is always recommended, and ask for help getting your financial ducks in a row. Or you can also check out a free resource I have, the Get Legit Financial Checklist, right here available for you to download. Just don't fall into the trap that your online shop is a hobby or doesn't have tax responsibilities, or you don't have to deal with this thing until you hit this certain milestone, because there really is no milestone. It's up to you to get up to speed on what financial stuff you need to be dealing with from day one. So take the time to take control, get educated, and get help if you need it. Not understanding your tax responsibilities and not keeping track of your stuff in a bookkeeping system is like a double whammy that makes for a very stressful year end or tax time for you. It's also what leads to the bonus mistake I've seen, something that I see many makers regret years into running their shop, and that is not properly tracking their physical product inventory. I see so many handmade sellers, for whatever reason, learn about this concept like 2 or 3 years into selling, and they are really surprised and stressed out once they come to this realization about inventory and cost of goods sold. So they may be a couple years into their journey of selling, and by then you've got thousands of dollars tied up in fabric, beads, paint, shiny objects, craft supplies, and raw materials, their inventory basically. And then they learn about this concept, and it looks a lot like this. So I could talk about inventory for a long time, but for purposes of this video, let me summarize by saying the concept that they learn about is that you're not supposed to be deducting the cost of your inventory, materials and supplies, or physical goods until the year you actually sell them. That means you should be tracking your inventory costs and quantities year to year in a system that is made or designed for tracking such things. We don't just record the expense in the year of purchase. We need to know how much we used and sold year to year so that we're able to deduct it at the proper time. If you want to get more up to speed with the concept of inventory, then I'm going to link to a blog post here that explains it in more detail. I'm curious to know if hearing any of these mistakes has set off any alarm bells in your head. Let me know in the comments. And if you're currently making any of them, it's not too late to get things straight. We know better now, and we can do better now. Make a list of the questions or topics that you need clarity on. A great place to get started looking for answers is right here on the Paper and Spark YouTube channel or in my resource library at paperandspark.com.